Okay, I think I'm live. I hope so. Okay, I think we're live now. Okay, I think we're live now. Yep, all good. Okay, a lot of this here. All right. Yeah, I think everything is correct over here. Perfect. Okay. There we go. Let's move myself over here. Do something like that. And there we go. Perfect. So basically in these live streams, I'm basically just sitting here to answer your questions. If you have any problems with Forex Online, if you want to have a word with me, say, or show me a strategy that you want me to try out or anything, you can send me a link of your strategy. We can check it out and good things like that. And on top of that, obviously we're going to be testing a few trading strategies from YouTube. Just check them around, see how they perform, and who knows, maybe they're really good strategies and we find some gold mines. So this is more or less the idea of these live streams. We'll just basically sit here with you, chat around, and see how things go. So I've already pre-selected 3 videos here to actually go through as different strategies that we can test out. And based on that, we'll just see the results and see how they actually perform. Most of these traders that I've selected today are traders that have got quite large community, so those strategies, I hope they're going to be quite good. But who knows? We'll have to just check out and see. So, okay, it's working all right. Perfect. So let's start with the first trading strategy. And like I say, if you have any questions or you want to just show me a strategy or anything, just drop me in the chat. You can drop the link by basically selecting your project inside here. I'll just show you in a minute. If you go to here, share, here, you can share your project here. Okay, so basically you just copy this, paste it in our chat of YouTube, and basically from there I can check out your project and see how it looks, and obviously gives you some tips and tricks if you need them. But let's start off with our videos and see what this strategy is all about.
Most scalping strategies are loud, hundreds of trades a day, 5 screens, non-stop action. But this one is boring. And that's exactly why it's made me over 22,000 in the last few months with a 78% win rate. In this video, I'll show you the boring scalping strategy behind my results step by step so you can recognize these same setups in your own charts. Then we'll look at real trades from my live streams so you can see exactly how I execute in live market conditions. Just smash a like button, subscribe to the channel, and let's start with the verified results. So here is that verified trading account using my scalping strategy, up 22 points.
That is quite interesting because he has 0 deposits. I don't know what he's trading with, but if he's got 0 deposits, how the hell is he trading? That's a bit weird. I'm going to say that is a bit weird. But hey, we'll still check out the trading strategy. But if there's no deposits, how do you make money? How do you trade? I mean, that's quite interesting. But anyway, let's see the trading strategy.
5 as promised. If we come down here, you can see the win rate is 77% on the live account, and in my back test it's at 78% over 110 trades using recent data.
This is interesting as well, and I've said it in a couple of videos. When we do a backtest, we're always going to get better results than in the live account. That's why when we do a backtest, we've got to have really good good results. So when we actually take it to a live account and we apply spread, we apply commissions, when we apply all that, we get we still get a decent result. So the backtest has always got to look amazing. It hasn't got to be like a meh result. It's got to be a really good result.
Now this is not a guarantee of future performance, it's simply my trading accounts. And now to show you exactly how I did it, let's jump into the strategy. What I want you to understand today is how I consistently get trades like this one and this one in about 90 minutes per day by having multiple rules for each trade that work together. Now the strategy all starts at 9:30 a.m. Eastern. I'm marking out the range high and the range low of the first 3 5-minute candles or the first 15-minute candle. This is an important range because at 9:30 at the New York Stock Exchange Open, we have the sellers and the buyers fighting over the direction of the market for this session. So what I'm always looking to see is a candle closure out the bottom or outside the top of the range, which is exactly what we're getting right here. That candle broke and closed, which is my first indication that I'm going to be looking for buy trades today. Then I need to establish a point of interest. And the best point of interest, in my opinion, is always a level of demand. That is simply a level where the price came out of explosively with multiple green candles in a row. A price move this large can only be created by big banks and institutions, telling me that big banks and institutions like this level right here, making it an area of demand. So next, all I'm really doing is waiting for price to come back to that level of demand so I can consider getting into a trading position.
So basically we only need to select the first 15-minute candle of the 9:30 Eastern time. So it'll be, for me living in London, it'll be 1:30. And then basically what we need to look for is to create the zone, then create this level of demand inside this zone and wait for the price to approach it. That's more or less what I'm seeing right at the moment.
But I also want to make sure.
And it's on gold. I see it says here, operaciones con oro. So that means it trades on gold.
with step number 4, that I'm trading with the trend. The easiest way to do that is come to indicators, type EMA, and put a moving average exponential on your chart with a period of 200. Now, if the price is consistently above this level right here,
Hi Cloud, welcome to the stream.
that means we are trading in line with the overall trend. For my stop loss, I'll either put it below my demand or below the range. Generally, I want about 5 pips, something like this. And as for my target, I like to target recent price. You can see the recent price right there. That's an area where I like to target because I know we reached that level recently, so it's very possible we can reach that level again. So here is that trade playing out. And you can see it smashed the take profit right there, and every single one of my rules were met. Now, if you've traded orb before, you know it's not always this easy, which is why I have a bunch of tricks and secrets that I use to avoid losses, which I'm going to show you. Now, before I get into my live trades, I want to show you the 3 main things I avoid when I'm orb trading in order to keep my win rate high like this backtest. When using my scalping strategy, if there's a huge news candle like this before the setup of my trading range, I'm simply not going to trade that day because the breakouts aren't going to work. There's just tons of fake outs, and then I'm just going to lose trades, which is what I want to avoid. The second thing I want to avoid is the huge range. You can see this range is massive. There's a ton of manipulation, and in my back tests, I've seen that in these conditions, there's just a much higher chance of failure. And the third and last thing I want to avoid when I'm orb trading is trading at bad levels. Look at this level right here. It's a very obvious level of resistance, okay? When price came to this level, it shot down aggressively. So I know that this is a strong level. So instead of taking a buy trade from this level because I have the breaking close here, I'll be looking for a sell position, or I won't trade it at all because I want to keep my scalping strategy win rate high. Now we're going to do some live trades, but before we do, if you're looking for a place to trade, I recommend the Risen FX broker.
Okay, so basically I think I've understood everything. Let's head to our gold. That's where we're going to be trading. Just call it trade with Pat, just to have it as a reminder. And we're going to go to the last years, I would say, because basically at the end of the day, I'm interested that it actually works in the recent time. So let's go. I would say let's go to January 2026. I think that's a good time to start. Set this to London. There we go. And leverage can stay at 100. So let's see how this one performs. I mean, I've tried this type of strategies before, so it shouldn't be bad. Honestly, shouldn't be bad. But obviously, we need to check out and see how it works. By what I've seen is, did he give us a confirmation? That's interesting. Did he give us actually a confirmation? Let's just check an example. Settings. Okay, we've got an ad. YouTube needs to make some money. We've got an ad here, not to worry. Not to worry. They don't take too long. Okay. Another ad. Yeah, we need 2 ads. We need 2 ads. Okay, there we go.
Had the closure right there. I had my level of supply right here. It was a weak one, right? We only had 2 red candles down, but I was still very confident because we had that hourly level of resistance. You could see price pushed down very aggressively from this level. So I was hoping price would come to this level again and price down aggressively, right? What I did is I still wanted to enter within my orb, right? Because I always enter basically within the orb, but having my stop loss above this level of resistance was a way to protect myself in this trade. So if we actually jump into my live stream right here, you should definitely join me. You can see I smashed my take profit there for about 1,700 live on stream in front of everybody. And so now let's go ahead and play that out here on TradingView as well. You can see price almost went against me, but then pushed down and smashed my take profit at this level right.
It looks like he's not waiting for any type of confirmations. He's just setting the level of the demand or that and just placing the trade there. So I'm just going to do exactly the same. I'm just going to do exactly the same. So let's jump to our New York. And in this case, it's got to be a special session because New York, here it opens at 1 o'clock. That's when the actual New York opens. But we're going to look at the 1:30. So we're just going to change this there to set it to 1:30. There we go. That's our custom session. And then we can just jump to that one and mark out our 15-minute candle. That will be exactly this one there. So now basically we're going to wait for a breakout of this candle. And I think the best way to do is actually having a double layout. So actually see it in 1 minute and 15 minutes. So we'll be able to see something, or I would say maybe 5 minutes. 5 minutes. The candles have a bit more a body. Hi Daria. Okay, so now we got this. We need to wait for the breakout. And that is a breakout, it's a candle closing above. So, honestly, drawing this zone here wouldn't make too much sense for actual entry. Now it's pushed out. Okay, now the zone does make a bit more sense with being this one here. So basically our entry spot would be here. If we look backwards, we have these levels here that could protect us. So maybe placing the stop loss below this level maybe could be an idea. Could be an idea. Let's see if the price actually approaches the level again. Looks like it's not going to approach it. It's flying away. Okay. And I would say that once we've been now in the market for a couple of hours, I would say I wouldn't be trading anymore now, because at the end of the day, by time it is now, there's the London volume has disappeared. London exchange is closed, so I would jump to the next day, to be honest. So let's just hop to the next day straight off and mark out again our first 15-minute candle. It'll be this one there. Okay, and now let's see if we get any type of breakouts. Okay, that's closed above, but it's not really a strong close, so I'm not going to take. Okay, now that looks a bit different. Okay, now we can find our demand zone that is sitting right there. I would take more or less something like this. That could be our level, and we do have this level here as well that could protect our position. We'll wait and see if we actually get the price to turn. Okay, hey, that's been a good entry. It's literally on the tick, so we'll be entering on that place there. So let's end our limit just here. Okay, there's our limit. Stop loss is going to be, how much is this stop loss? Well, this stop loss, it's not small, so we could actually leave the stop loss there. Add the take profit up there. Risk 1% of our account. Place the order and the take profit. Yeah, it'll be sitting more. So we've got a risk reward of 1 to 2. That's not bad at all. It's not bad at all. I'll leave it at the close of these candles. Now let's see if we actually hit the take profit. Okay, so that is a take profit hit. For some reason, it's not closing the trade. Ah, it didn't open it. Oh my god! Look at that. Look at that. Obviously, yeah, with the spread, it didn't actually open the trade. I mean, my god. I mean, I want to see this live. Oh my god. That must have stayed away literally a tick. It's a tick from my entry. But it's a shame. It's a reality. It's things that happens. It's going to happen in real markets. So obviously, I'm not going to take it straight. It would have hit the take profit, so we must keep that in mind. But my god, it's stayed a tick away from our entry point. But hey, that's something natural. It's going to happen, and trading's like that. Especially if you work with orders like buy and sell limits. It's just shit happens basically. But it's a shame. It would have been a nice take profit there. Risk reward of 1 to 2, so that could have actually added some nice profit on our account. But hey, it is what it is. Let's head to this one. Let's see how this one performs. Okay, there we've got a nice close. Do we have a nice demand zone? Yeah, we've got a nice one there. This looks like a nice demand zone just below. Is this a fair value gap? No, we don't have a fair value gap there. But in any case, it's still a nice level, so just leave it there where it was. Let's see if we get any price action coming back. Yep, we do again. And look again. It's not going to open our position based on spread. Based on spread. If we add our buy limit here, it's not going to. I'm just going to leave it there so you can see it wouldn't open our trade on that size. But in any case, we're still going to leave it there because it can actually pop back in. But unfortunately, it looks like we might be missing this trade again. So I just stop us just there. Say just below that level there. Change our risk, and the take profit would be, I would say a beer, to be honest. Should be a nice level to place our take profit. Let's see if we get any other reaction. It might go down, it might even hit stop loss. But oh my god. Look at this. Okay, the trade's disappeared just now. But look how the actual price came so close to our take profit and then actually smashed the actual stop loss. For some reason it didn't actually open. I'll just add it in again. But that was a shame. I mean, look how close it came. That's crazy. That's crazy. But hey, it is what it is. A stop loss is a stop loss and we can't do anything about it. But there's two trades that could have been take profits there. I mean, if we're trading on the real markets, me personally, if it would have opened the trade, then I would have actually probably closed near the take profit, because I always close near the take profit. It's a habit that I've got. You can call it a bad habit, a good habit, but it's something that I tend to do a lot. But it's a shame. That's a shame because it would have been a really good trade that we've actually could have had there. And as well, something that I would take in mind is that if this happens and it doesn't enter the trade when it touches the zone and it goes on near my take profit, I'll probably take away my order because I understand that that's already been fulfilled, and at the end of the day, it doesn't make any sense keep pushing something when it's already finished. It's like joining a party when everybody's gone. That's now, for me, it doesn't make any much sense. But let's see if we get any nice breakouts here in the 5-minute candles. Ooh, it's wicking everywhere. Okay, it's broke out. But this breakout, honestly, if it retraces, I don't like it, honestly. Let's see if we get any other pushes. Okay, that makes a bit more sense. But just now, the zones that we have are a bit weird. I mean, because we could set up this zone here as something to push in, but the price has already touched this zone and gone up, so I could consider it used, especially after having this push up against. So I think this day we wouldn't be taking any type of trades because it wouldn't make too much sense, to be honest. So it's finishing off. So the trading day has really actually come to the end for me, because when the London volume disappears, I don't like to be in the markets anymore, because I prefer to have this double volume of New York and London, because obviously there's more volatility, especially for these type of trades that I want like a quick entry and to snap to my take profit. It's not going to work now. Let's just jump to the next day, see how it works. Up to now, it's not looking bad at all, to be honest, because we have had two trades there that could have been really good, and unfortunately they didn't open basically. But they did. Ooh, okay. This will, following Pat's tips and tricks, we wouldn't be taking anything in here because this volume is enormous and it wouldn't make too much sense. But let's see how it develops. If we would be entering, we'd be looking at this candle here, so virtually the complete zone. But the price is just going away and not doing anything, and it's coming back to near the actual finish of the day. So here it wouldn't have entered at all. And just hop to the next day. The good thing on Forex Online, we just hop to the next stage, to be honest, because otherwise having to scroll each time and match the time would be crazy. Okay, this is interesting. This candle is massive as well, so we could expect the price to come down here, to be honest. Let's see what happens there. Okay, it's broken out. It's broken out, but placing a stop loss here for me isn't a very good idea, to be honest. So let's, yeah, exactly. That's exactly what I thought was going to happen. Yep. Okay, that's something that we need to take in consideration. Maybe when he talked about said about big candles, he was mentioning these as well. So no, good that we didn't enter this trade, because it wouldn't have been a good idea either. It wouldn't be a good idea either. Let's go to the next one, and ooh, there's a lot of spread on here. We've got a really big candle as well again. Let's see what happens there. Okay, we have the breakout. This breakout doesn't look bad, to be honest. And we do have this level sitting here. That could actually add an extra layer of protection to our trade. So if we do take a trade, we'll probably have it. Yeah, I think we could take a trade if the price hits this candle here, basically the box again. We could actually attempt to enter. So let's see if the candle actually reaches it. Okay, it's come really close here, and it didn't enter. Okay, now we'll be entering the trade probably. Obviously, it's coming here quite close, and that's something that I don't like, that when the price comes close and then it flies away again. For me, it's like it's completed the setup, but it hasn't actually completed it in the way I want. So honestly, I maybe wouldn't be taking this trade, but obviously we're going to take it as for backtest reasons. But in live, probably this trade maybe wouldn't be the best idea once it's already done this. That's why I don't like as well using too much the limit orders, because at the end of the day, the price is never going to hit exactly where you think it's going to hit, and when it does, it doesn't do it a lot of times. So honestly, it's not something that I really like doing. I prefer to enter more in terms of with buy and stop levels that they open when the price goes in your favor, and I tend to feel more comfortable doing that. But let's just set it to 1% and see how this one performs. Let's take profit. I would say it'd be at the high, so it's got risk reward of 1 to 3. That's quite decent, and it could save us the backtest. Let's see if we get. Ooh, it's looking good. Now another thing, we don't have any instructions to actually add any break even, and just now the price has reached a 1.6 of risk reward. So it would be interesting to protect the position or take at least some partials or something, maybe when we're going to half of the take profit. So okay, that's something that we could take in consideration for future backtests, especially videos that we can make and everything. Actually optimize it in this way, because not protecting the position when we've gone above the risk reward of 1 to 1, for me it feels a bit criminal, to be honest. But let's hop to the next one, and let's see what this candle has got to say. Right at the moment we are losing $178. Nothing massive, nothing that we can't actually recover from, so that's fine. Let's see if we see any breakouts on this place here. Okay, there we have a breakout, and right now we are quite in a choppy market as previous levels, so we do have some protections here, but as well what we have here is liquidity, so maybe that's not the best idea to actually enter liquidity. But we'll chat, see what happens if we get a better breakout. No, we've got a breakout on the downside, and to be honest, we could actually wait for a retracement. We could look for like price rejecting more or less to this zone here. Let's see if it happens. But we are coming near the end of, I would say, my trading day. Okay, it's a bit late, to be honest. I don't think it would be a good idea to enter the market just now, because it's quite late, and yeah, I would have hit the stop loss. Perfect. Okay, we're saving a couple of trades here that we could have hit stop loss as well, so that's not bad at all. We are understanding how the market is moving at this time of the day, so obviously that as well is based on I've got quite a lot of experience trading the New York session, so that's something that I can expect as well. But it's not looking bad. It's not looking bad right now. We can see as well market structure shift on the 15-minute time frame. That is interesting as well. And we do have a zone here that could be interesting to trade. So something maybe. Honestly, it's a zone complete. Yeah, it's an entire rectangle more than seeing anything else, because the 5-minute candle is quite big. So if we get any touch on here, okay, we've got a touch. So let's enter this sell position there. Not looking bad, to be honest. It's not looking bad. At the end of the day, we've got this market structure shift here. We're having a pullback, so it could be interesting. So let's add our stop loss just here above, and the take profit probably sitting down here. So this risk reward is a bit smaller. We're looking more of a risk reward of 1 to 1.5. So it's still okay. It's positive. So let's see if okay, yeah, it's hit the complete stop. I was going to say, if it just wicks me out and then comes down, that's going to be horrible. But no, it's okay. It's okay. Even if we were to place a stop loss here above, that's fine. here we can see the example of a double market structure shift. That is quite interesting because it doesn't happen a lot. We've got this market structure shift here, and then we shifted it on this side here, taking this liquidity and dropping down. So that's interesting to take note of as well in terms of a future optimization or backtest or whatever. But let's hop to the next one, see what we can get. So we're going to be marking out this 15-minute candle there, and let's see what we get in 5 minutes. Up to now, the strategy doesn't seem bad. Maybe it could be me that I'm not executing it in the best way, or it's just been some bad days for this strategy. So we'll just have to wait and see. But right now we have a nice breakout, and we could be looking easily at this zone there inside of our 15-minute orb. So let's see if we get a turn back on this one. Ooh, that looked quite nice, to be honest. That looked quite nice. How it actually rejected from this zone here and went up, and it could have actually smashed the take profit up here. So it could be interesting as well, maybe to not center ourselves so much. I mean, in future backtests, not center ourselves so much in looking for this demand zone or anything like that, and just centering using the orb more than the demand zone, because just now it could be me that I selected the wrong demand zone, or it could be that it actually works better just hitting the orb and going up. Obviously, it's going to make the risk reward smaller. We're going to have so big risk reward, but it's still interesting. It's still interesting to actually analyze it, because for me, it's a lot more simpler to, when I approach the real market, is to actually trade the orb directly, because I don't have to be looking for a demand zone or anything like that, and he would have hit a nice take profit on the go. So look, exactly, that's what I mean. That's what I mean. I mean, it's hit a take profit, then it comes down, we're waiting for our zone, boom, straight stop loss. So yeah, that's not it's not looking good on terms of looking for demand zones, and it's probably more interesting to actually look for basically the orb directly. But let's see how it goes on. Just now we haven't even finished the month, and this one is quite small, so we can expect a strong breakout. Okay, there we go. There we've got our, I would say demand zone would be something like this here. See if we get a pullback on that. Again, it's okay. This wouldn't have opened. This wouldn't have opened. I'm sure this wouldn't have opened. So the stop loss, I could say, we'd probably place it, maybe could place it above this level on this side there. To be honest, it feels a bit more secure, but then the risk reward will be quite small as well, so we can actually, we'll leave it just above this level there, because obviously otherwise we are going to lose quite a lot of risk reward, and that's not really interesting. But let's see how this. Hey, it did open. It did open. It did open. Hey, it's looking good. No. No. Hi Pablo, how you doing? Happy backtesting, say for you as well. To be honest, it's not been very happy. Look at this. Price approached literally or nearly a risk reward of 1 to 2. We're not protecting the position. We're not adding any type of trailing stops, and because of that, we have another losing trade. So I hate this. I hate this when we get these type of streaks. We're seeing so many profits on the table, and they all just vanishing. But hey, it is what it is, and this is why you got to backtest before you go in any before you even think of trying on a demo account. Because as you can see, I'm doing the strategy really similar as he's doing. I've got a lot of experience backtesting the New York session, obviously not with this exact strategy, so it's not like I've got experience with the strategy, but I do have experience backtesting the New York session. I know how the price moves, and I'm doing things really similar as he's doing, but the results are not looking near close of what his results are getting. And this is why you actually got a backtest and actually realize, okay, this is going to work, this isn't going to work. Or I've got to change this, or I've got to do that, or I've got to add a break even, or take partial when I get to risk reward 1 to 1, and things like that. Because otherwise, we're going to do this in a real market, and you're going to feel awful. Because after the first 2 losing trades, you're not even going to have any trust in the strategy. So that's a pro tip there. Okay, we do have a strong breakout, and we do have a nice demand zone here. So let's see. Let's just continue backtesting with this one. Let's see how if it performs. Oh, it's coming quite close, quite strong as well. And okay, that where we'd be entering. But to be honest, I don't like the entry. I must admit. Maybe it actually goes in a good way, but I don't like the entry based on something really simple, and I'll tell you in a minute. So I'll be somewhat targeted in this high up here. Sort of 1 to 1, 1 to 3 nearly. And the thing is, the price right now pushed high. Okay, it's had a massive push down, saying basically that there's more selling volume than buying volume, because we even had a market structure shift here. Price tries to go high again, and probably reacted in 1 minute to one type of order block or something like that. Reacted and pushed even harder down. So we can expect it to go down, or that this level here there's enough volume entering and it actually resists. So let's see. Okay, again, we're sitting above risk reward 1 to 1. We could actually be protecting. Okay, that's looking good. We actually reached a risk reward of 1 to 2 here. That's interesting. Let's see if we actually get. There we go. First take profit of the stream. What's the chat say? I just don't get it. I just don't get the not so happy mood. The guy promised what? 22k a month? Okay, look promising, but at the beginning, but we'll see. Honestly, I'd rather go for more technical rules for exits. The resistance zone isn't resisting. No, Clad, I'm completely happy. Don't get me wrong. Don't get me wrong. It's just a joke. Cause just when he said happy backtesting, we were just in a 3-4 row streak. I'm just making fun about that. Honestly, I'm totally fine. It doesn't affect me. And by what I'm saying, I don't mean the actual trading strategy is bad or anything like that. I mean, there's no drama there, to be honest. But I was just making fun because it was funny, because just when he said happy backtesting, it's like, okay, yeah, happy backtesting, sure. But no. Don't get me wrong. I honestly believe the strategy is actually, it's not bad. Otherwise, I wouldn't. I mean, obviously, the strategies that I've selected, I've more or less seen the first part of it. And the strategies that I actually think that can be good, but obviously they need training, they need backtesting, you need to test everything out properly. But no, that was just funny. But hey, we have hit the first take profit, risk reward of 1 to 3 virtually. So that is very interesting, because if we lift a few more take profits, then we could actually be in front of a quite good strategy. So we just have to see how it works. The only thing that I don't understand is how we managed to get to the win rate of a 70 something percent, 75%. I mean, that's a bit high, to be honest, for the risk rewards that I'm getting right now. Okay, but just to put you in context, to have a 75% win rate, we'll be looking at a strategy that probably will be a negative risk reward more than a positive risk reward. Oh yeah, sure, Cloud, obviously, yeah. I mean, obviously, like I say, I'm just joking. But no, the strategy is looking good. It is looking good in terms of the mechanical rules are quite simple. The only thing that we don't have a technical exit in terms of exactly the high or near the high or things like that. And honestly, I don't mind that either, because once you've got experience, I'm a person that I've got my exit rule in terms of this zone, but I tend to exit before based on how I see the market. So I don't think it's a bad idea having the exits open, because at the end of the day, the open exits could give you even more profits than just like a closed exact exit. But in any case, let's see how we continue. Let's see if we can get some more take profits. That would be really interesting. Okay, this is a nice breakout. I like the breakout. I like the demand zone that we got here. What I don't like too much is that we have some liquidity here below, and we have a down market structure. So we did actually mention something similar in the video, because we do have this level here that has pushed strongly down, so we could expect the price to go maybe a bit lower. So let's see how this one works out. Okay, it's actually touched the orb. Okay, this would be a valid trade. I know it sounds sad, but this would be a valid trade. Because obviously we haven't actually cancelled this trade, so this would be a valid trade, unfortunately. Unfortunately, this is a valid trade, so we need to take stop loss. We've got to be fair. We've got to be fair. What we could, in another backtest, maybe think about some type of confirmations or something. It's not enter rawly, and maybe with these confirmations we could actually think about not entering with limits and entering with actually with just the confirmation when it actually gets near the zone. I think that could be interesting as well. But hey, let's add the next one. Just now, how many trades have we taken? Just out of curiosity. Taken 1, 2, 3, 4, 5. Well, these come to the end now. Please, 1, 2, 3, 4, 5, 6 trades. 6 trades in 1 month of trading, nearly. Well, 22 days. Is still some time to complete the month. Let's see if we get a few more. Okay, that's not looking bad at all. That is a nice breakout. We have a nice zone here, just waiting for us, just chilling. See if the price approaches it. Ooh, okay. That is approach. That's what we want to look at. That's what we need. There we go. Lightweight. Okay. This is down there. 1% risk. We're looking at a risk reward of 1 to 1.7. So not looking bad, to be honest. Not looking bad. We could have a nice trade here. No, we don't have a nice trade there. Okay, that's fine. We have a nice stop loss there. That's what we definitely have. Okay, let's jump to the next day. Let's jump to the next day, see how it keeps performing. Honestly, I think the strategy, if we do some refinements, could be quite interesting. Could be quite interesting. So, just a question of when we've had a couple of trades, we could see more or less how we could actually refine it and maybe do another backtest in a video or something, hop the video up or something. So let's see if we get any breakout here. Okay, there we have our breakout, and we have our zone just sitting there. Let's see if we. Oh, that's nice. That is beautiful. That will be a nice trade if it opens, if the spread doesn't fuck up. But if it does, that will be a quite nice trade. That'll be placing stop loss there, and a risk reward. Ooh, it's negative risk reward, isn't it? Let me check. No, not negative. Just literally 1 to 1. It's not bad. It's not bad. But yeah, that's a nice take profit there. Nice take profit. We need our take profits. Take profits are good. Okay. Let's see the next one. Looks like we're having a couple of more trades at the end of the month. We do need them, so let's see if we get another breakout here. Okay, that looks for me like a breakout. Don't know what you think about it, but I think that's a breakout for me. And do we have a zone here? Oh. I think the only zone that we can rely on is this one right at the moment. And let me just check here, where does the wick go? The wick comes down here, so include the wick as well. So it'd be more or less 50% of this orb. Let's see if the price actually approaches it. Okay, approaches it. And we are in a position where we could go to the low, so it's not looking bad. Not looking bad at all, to be honest. Let's place it up. There we go. Stop loss would be, yeah, up there. To be honest, we could place it right up there, but I don't know if that would be the best idea to get a nice risk reward. But let's leave it like that. Not looking bad. It's not a bad setup, but I personally, I don't think it's a bad setup. Right? No. Again, where did it come to? 1 to 1.8, and we're sitting at a 2% of take profit. So, for the sake of $20–30, we'll just hit a stop loss. Yeah. Okay. So I think we are learning a couple of things here, and the first is we need to add some type of trailing or some type of break even to this trading strategy, 100%, because it's working so many times back after putting us in profit. And I could even say, I mean, just with a risk reward of 1 to 1, we'd probably be in profit right at the moment. just sitting on a 1-to-1, and that would probably be even a better idea in terms of if we want to seek for that 70% win rate. So yeah, definitely for future backtests, we'll need to add a risk reward to this. A risk reward, sure. A break even. My brain just shut down for a minute. Okay, there's our zone. Let's see if we approach it. Okay. If it approaches it now, I don't know if I want to take that trade. To be honest, it does approach it. We'll take the trade, but I don't like it too much, to be honest, because it came out the orb, came in, rejected down, had a massive entry of volume, pushed up again. Obviously, the seller's pressure came in, pushed down again, but now it's pushed higher, taking this liquidity. It could be a good trade if this liquidity here and the seller pressure is enough here to actually push price down. So let's see how it develops. I could actually leave the stop loss like it was, to be honest. And the take profit is going to be sitting down here at these lows. Looking at risk reward of 1 to 1.3.6. That is a quite big risk reward. So let's see. No, exactly. At the end of the day, you can actually tell when the price is saying, no, we're not going to go in that direction. It doesn't mean it's going to go in the opposite direction, but you can see that it's not going to be the best trade. But hey, like I say always, we need to try things out firstly to actually see how they work. And from there, we can just refine them, optimize them, and find the perfect good trading strategy. I mean, this is a great base, to be honest. Why? Because it's just one trade a day. And I mean, me personally, I prefer one trade a day because it's just really simple. You don't have to overcomplicate. You don't have to think how many trades you need to take. You don't have to think about any of that shit. You just need to just take your trades that day, same time. You get better each time by looking at how the market look at. I mean, just with these trades that I've taken now, I can see that I need to add a break even or at least a partial take profit at risk reward of 1 to 1, or even leave at risk reward of 1 to 1, and then we start refining, and then we start building, and that's where trading becomes fun, because at the end of the day, you start seeing things that you didn't see before, and it's interesting. But what is interesting is probably the stop loss that we're going to hit here. But it's still a valid trade. The setup is completely valid. We can see the same example that we saw before. The price came back down, pushed up, didn't have enough, pushed back down, took this liquidity here, has pushed up higher, pushed up again, and then pushed even higher. So it could look like a similar stop loss that we had before, but in any case, we need to take the trade, see how it works out. Maybe I'm wrong, and it does actually hit take profit. Be risk reward of 1 to 2, more or less. So let's see. But with that volume that's come up, it could be yeah, exactly, it could be a stop loss. That's fine. That is fine, and it's things that we learn from. We can see that if we see a consolidation outside our orb, that probably means that there's going to be a pullback. So not bad. I'm actually happy with what we're seeing, because we can see a few things that we can correct, and I think that's interesting. Okay, let's head to the next day. Just now we're up to virtually the trading month, so that is that's some good news. We can see we have had a few more trades than I expected, so that's interesting as well. Let's see the breakout that we find on this one. Okay, nice breakout, and we could be looking at this zone here. Find it quite interesting. Let's see if we get a touch on it. Oh, we get a nice touch there. Oh, the stop loss literally fits the zone, so that's great. But I will actually add it just below this wick here, just to be fancy. And the take profit will be more or less, I would say, up there. That should be fine. So just a bit above the risk reward of 1 to 1. Let's see. Hey, yeah, we got a take profit. Finally, another take profit. We've got to celebrate these take profits, you know that. Okay, let's head to the next day. Let's hop to the next day and see what we can find there. Okay, let's mark out the zone here. Perfect. Let's see if we get any type of breakouts on this one. Okay, we got a breakout. But this one would be the only one valid, to be honest, because this big candle there, it's all the orb, and the breakout isn't big enough to take the entire orb yet. So let's see how it. Okay, be entering there. I don't like this trade at all. I got a bad feeling. But let's see what happens. Let's see what happens. I'll be placing a stop loss above this wick here. Makes a bit more sense. And take profit down there. So it'll be something like that. Wish water 1-to-1. Let's see if we can get this continuation. Okay. Stop loss there. Just outside. Unfortunately. Ah, don't do that. Don't do that, man. Literally, wick me out. Hit take profit. Happy back testing. Oh god. Well, it is what it is. It is what it is. Could be as well my bad. I could have maybe selected the higher zone or whatever. But at the end of the day, that's what we. Well, that's why we need to backtest and see what happens and see how things work out. So, okay, that'll be the zone. Sounds reasonable. Let's see if we get the price coming back to it. Okay, the price has come in, so we'll be entering a short position there. The only thing that I don't like is that we right in the 50-minute we are in and up. Well, no, we're not. We have actually broken the market structure level here, so no, we are fine. We are fine. Could be a good trade. See how it turns out. See how this one turns out. Set that there. Perfect. Stop loss is going to be literally above there. And take profit's going to be most down here. And I would say the stop loss we could bring it up to here, just above these wicks, to give it a bit extra protection. And just now, oh, my bad, I didn't set the risk reward properly. Let's set it in again. There we go. Why is it sitting at 66? That's not a. It's not a one-to-one risk reward. Huh? Am I doing something wrong? What's going wrong here? I got 1.5 then. For some reason it's got some type of miscalculation there, but hey, that's fine. That's no major issue. See how this one works out. It's getting a bit more than 1%. Okay, that's not looking bad. Please hit that. Yeah! Made it. Made another take profit. Great. Shame it's not a big risk reward one, because we need one to actually recover the account. But we can see as well, we've been trading in a month with a $10,000 account, risking 100 trades, and we only ended after this first month on a minus 2.7%. So that's really no drama there. There's no drama there. We're not going to be a drama boy right there, to be honest. So it's not looking bad at all. But I want to actually see how many trades have we taken. Let's have a quick look on the analytics. We've taken a total of 14 trades. Okay, it's not bad in 1 month, hey. I mean, we can take a maximum of 20, because obviously it's one trade a day. So that's not bad at all. And I could see some things. Obviously, we don't have a lot of data yet, but we could see that the exit optimizer is giving me some results here that we could try out. I mean, any result is actually better than the one that we've got right at the moment, but there's something like that. And even like 15-minute trades. That doesn't look bad, honestly. And stop loss has to be a really short stop loss if we actually, or we could use the same stop loss that we've been using. There are some optimizations that we could add here, to be honest, but obviously we don't have enough data yet to actually give it an optimization. But it's not looking bad. It's not looking bad. It's not looking bad at all. Let's try out a bit longer. If you want me to change it to the next strategy or whatever, just drop me in the comment section. We can hop to the next one. But just now I'm quite comfortable backtesting this one. So like I say, if you Okay, we actually got a trade here before I keep talking on. But yeah, whatever. I'm up to whatever you guys want to do. I'm happy backtesting anything. I enjoy it. So let's see how this one works out. Okay. Stop loss now, I'm going to set it down here. And I don't care what anybody says. Because here it's just too close. For me, this is too close. I'm going to be more secure. I prefer to risk the risk reward more than placing a stop loss so close, to be honest. So profit is going to set it up there. 1% risk. And let's see how this one performs it. But this stop loss here is just too close. I mean, we could have wicked easily. We even wicked down that one, hey? And now it's going to go take profit. Ah, lovely. Literally, it would have come to the take profit. I can't believe it. Wicked me out again. Maybe we should have placed a stop loss even the levels down here, but then the risk reward would be really short. So, it doesn't make much sense. But hey, we are finding out a couple of things that we can optimize on this trading strategy. Honestly, I've found a few things. So, like I say, maybe in a future video, I'll bring a video and sort of show you how an optimized result on this one. Obviously, we need to actually optimize it properly. We need to do like 100 trades or 200 trades, something like that, to first get a bigger data and more reliable data. But right now, I still don't think it's a bad strategy. I have seen a lot worse strategies. And now we have a dilemma, because this one has been used before it broke out. So another touch here. Do you think it's going to have enough buying power to bring the price up again? I don't think so. So I'm not going to take this trade if it does. But yeah, exactly. It just didn't make any sense, because you can see how it was what it was doing. So now, hop to the next day. We're starting to see better the trades that are not going to perform well. We have skipped a few trades that would have been a stop loss, so I think that's interesting. Obviously, that's as well based on that I've seen the gold candles on the New York Open for several years. So, fortunately, it's not something I can pass over to you in terms of a straight here, do this, and you trade exactly like me. Unfortunately, I can't do that, but you can get a general idea why I'm explaining why I'm not taking a trade. Why it doesn't make sense, because the markets tend to be quite logically. What's up, Cloud? The markets at the end are quite logic. Hate trading gold. Should try on a different asset. Well, honestly, gold isn't bad. Gold isn't bad, and for this type of strategy, it's actually one of the best assets, because it has these snappy pullbacks into the order block. You couldn't expect something like this on the euro against the dollar or anything like that. And if we jump to another asset, we'd probably be looking at the pound against the yen or something like that. That moves similar to gold, but at the end of the day, it's got a similar snappy movement. And that's what we're actually looking for a wick to enter our position, then drop down. That's what the actual concept of the trading strategy is. Because on the euro against the dollar, or more chill asset, it won't have these type of movements most of the times, because they're more solid moves. It doesn't have so many spikes, and this is interesting because we can grab these spikes on the liquidity zones. So that's why I haven't actually gone to another asset. Here we can see something similar. Price drop down into the thing, and probably if it comes lower, do you know what I mean? Should we enter the trade? That's a good question. Should we enter the trade? No. That's right. And it would have hit to take profit as well, after snapping me out. That's exactly why. In this case, we had to push down because it actually took the liquidity of these levels here. We could have placed a stop loss a bit higher, 100%. But we need to take in consideration that we still need to have a good risk reward. So that's the thing. Just give me a chance a minute, guys. But hey, let's try out another trading day. At the moment, unfortunately, the strategy isn't giving the best results, but it's not giving a disaster results either. I mean, must be aware of that. It's not being chaotic. We do have a breakout here, but I'm going to completely ignore it because it has no volume behind it. And I'm going to ignore this trading day completely because it's just breaking down, it's breaking up again, there's no defined direction. Maybe now we could look for a pullback here, but it's not something that I would like, to be honest. Right, it wouldn't have had a bad outcome. It could have hit this level here. It wouldn't have entered because of the spread. So we would have missed this trade here. But it doesn't look bad. Didn't look bad. But I don't like when the price breaks out like this and like that with no direction. It just doesn't make much sense for me, to be honest. Okay. Let's check this one out there. Okay. Right. We do have a breakout. The zone is quite big. And we're probably looking at something like this. Where's the wick end on this one now? Just to check. Okay. Just to fit that there. Perfect. Not a bad zone. Not a bad zone. Let's see if we approach it. Okay, we do have an approach. We have it with a wick. And wicks make me happy. Stop loss is going to go above the level. It makes sense to be there, and take profit down here, just a bit above risk reward of 1-to-1. So let's see how this one takes off. Hopefully we can start recovering a bit the account. No. Okay. I got stop loss set. No problem. Happy backtesting. Oh god, I'm gonna have that happy backtesting in my brain for the rest of the stream. Just to let you guys know. Okay. Let's see this one there. Nice breakout. Nice breakout. We will be probably looking to enter this zone there. The zone is quite small. Probably the stop loss would be entering and landing somewhere down there, to be honest. Okay, it comes back down. Okay. Ooh. Okay, this is actually an entry. Nearly missed the final result there. I did say, like I said, the stop loss will be entering down here, so that's no problem. Take profit will be up there. Got risk reward of 1-to-2 virtually, so that's not bad. Let's see how this one, if it actually finishes hitting hits stop loss again. Well, is what it is. It is what it is. That's fine. We're actually halfway through this second month, so honestly I might think to jump to the next trading strategy, because this one needs optimization 100%. We need to change a few things here, otherwise we're not going to get back the actual our money in terms of our backtest money. I mean, even with the exit optimizer having all the recommended, it just brings it up to 388, so we do need to optimize in terms mechanically. It's basically here try to improve your trading strategy's core profitability by changing some rules and all that. So I think we need to profitable symbol direction combinations. That's something we can look at. So yeah, 100% we need to give this an optimization in terms of changing around break evens or adding what's the name? When it gets to 1-to-1, take a partial, basically. So yeah, we'll hop to the next trading strategy. It was this one what we actually watched. So this one right at the moment isn't the best option. We need to optimize it. We need to do some work behind it. So let's jump to this one and see what it says.
Most traders think scalping means predicting where the next big move starts. That's a recipe for getting chopped up. The truth is, scalping is about catching a tiny, predictable piece of a move that's already happening. You're not the hero of the story, you're the pickpocket. You take a small slice and you walk away. So here's what you actually need. The 1 minute chart. A basic read on trend structure, which just means knowing what a higher high and a lower low look like, and the Fibonacci retracement tool. That's it. No moving averages, no oscillators, no paid signal group. Now let me tell you why Fibonacci works so well on the 1 minute. The ratios, the 0.382, the 0.5, the 0.618, show up everywhere in nature. Seashells, galaxies, sunflowers, even the human face. And for whatever reason, the market respects them too. Price pulls back into these zones like they're magnetic, then continues the trend. Now, you might be wondering, why not just take the point...
Here I must say, mention, Fibonacci looks like magic. If added a lot of rules, backtesting will be more complicated, but hopefully still happy. Yeah, it's always going to be happy backtesting. Always, always, always. But honestly, I don't like adding too many rules. But some rules actually to protect the positions, I think that was needed on that strategy, 100%. Because there's so many times we hit the risk reward 1-to-1. Obviously, the stop loss, we could have played a bit around it because it did wick us out a few times. So a couple of things we could change there. And what I wanted to say about this, so a lot of people think Fibonacci is magic, but at the end of the day, it's just based on odds, okay? We all know price moves up and moves down and up again. And sometimes we have the odds that when the price moves down again, because it is an uptrend, so it is going to have retracements. Sometimes it's going to hit the 38, sometimes it's going to hit the 61, sometimes it's going to hit the 78. And sometimes it's going to consume and hit the 90 odd. This doesn't mean it's magic. It's just, it's going to land somewhere on the retracement. And obviously, we have a few Fibonacci levels, so sometimes it's going to land. Most of the times, on a healthy trend, the market retraces from a 60% to a 50 to a 40% of its actual move. So that's why Fibonacci looks magic, but it's not magic. It's just odds, okay? Just if anybody tries to sell you that Fibonacci is the magic tool to see retracements, it's not. It's just probabilities, it's odds.
382. It's closer to entry. It's a tighter pullback. You get in faster. Sure, but the trade-off is brutal. Your stop is wider relative to your target, and price tends to overshoot the 0.382 just enough to make it the worst level of the three. After enough backtesting, the truth is consistent. The cleanest setups, the highest hit rate, and the best risk to reward all live in the same place. The range between the 0.5 and the 0.6.
He's making this quite promising, isn't he?
18. That's the gold zone. That's where we hunt.
What I just said. Between the 60 and the 40%. The gold zone is this here. This entire zone here. This is where we could look for confirmations. We don't know if it's going to land on the 61, the 50, the 38, and sometimes it can go higher or it can go lower. But at the end of the day, this is the zone where we're going to get most, because it's where a healthy trend tends to jump back down the most. That's all.
Here's how the setup works. Step 1. Find the micro trend on the 1 minute. In a downtrend, you want to see lower highs forming. In an uptrend, higher lows. Not philosophical lower highs, visible ones. If you can't see the trend, there is no trade. Step 2.
Good idea.
Wait for a break of structure. That's the moment price snaps the most recent swing point and signals that the trend is paused, not over. The break is your green light to start looking for a retracement entry. Step 3. Pull up your Fibonacci tool. In a downtrend, draw from the last lower high, all the way through the break, down to the start of the retracement. Same logic flipped in an uptrend. Step 4. Wait. Don't chase. Let price come back into the gold zone, the area between the 0.5 and the 0.618. Step 5. Enter in the direction of the original trend. Short in a downtrend, long in an uptrend. You can even split the difference and drop a limit order between the two levels so you don't have to babysit the chart. Stop loss goes at the 1.0 level. Take profit goes...
This is not a good idea. I've done this before. And honestly, yeah, it's cool because you set and forget your trades, but you need confirmations. I mean, the price can easily do... I mean, I get the idea. He's looking for the break of structure. And the odds of having a double break of structure are lower than continuing the one that's just recently added. But I prefer to have some type of confirmations before I enter the actual chart. Obviously, finding confirmations when we're already in 1 minute chart can be quite more difficult, so we might have to rely on this a bit, but it's not my favorite.
The previous...
Nice little ad. Okay.
Previous swing high if you're long. That structure alone gives you at least a 1-to-1 risk to reward, and most of the time it lands you closer to 1 to 1.5. The 0.618 entry is the sweet spot. Tighter stop, better reward, cleaner setups. Pause the video right here. 6 rules. Screenshot them. That's the entire setup. 1. 1 minute chart. 2. Trade with the current micro trend. 3. Wait for break of structure. 4. Enter on the 0.5 or the 0.618. 5. Enter at the previous swing low or high. 6. And if momentum stalls or the market is dead, walk away. The setup needs movement. Now here's the secret. But first, I want to thank our amazing community.
Okay, let's see if he gives some more examples of what asset to trade.
Watch this. When price comes down and taps the previous low, there's a really good chance it's going to bounce and form a double bottom. That's just how the 1 minute behaves. Aggressive traders try to squeeze another 20 pips out of it and end up watching the trade reverse all the way back to entry, sometimes past entry.
That's true.
You do the opposite. You go in already assuming a double bottom is going to form. You set your target a hair before the previous low. You let the trade close on its own. You collect your 1.5 R and you stop staring at the screen. Think about what that actually means in numbers. A 1.5 R trade that closes 90% of the time crushes a 2 R trade that closes 60% of the time. Every time. The math isn't close. Yet, most
100%.
traders chase the bigger number because it feels braver. There's nothing brave about giving back a winner. The bravest thing on the 1 minute is taking profit while the market's still
I like this guy. I like this guy. I like what he's saying.
wants to give it to you. This one mental shift will save you more trades than any indicator ever will. You're not trying to be right about how far the move goes, you're trying to be right about taking profit before the market changes its mind. That's secret number 1. Let me show you how this looks in practice on this pair. You see price rejecting a level. You mark it. You see another rejection and a clean break of the trend line. That's your break of structure. You pull your fib from the top.
That's actually not a break of structure, that's a continuation. Break of structure would be if it would break in the opposite side. So this is actually not a break of structure, it's just a continuation of the actual structure. If it would have come up and broken this level up here, that would be a break of structure because it's breaking the actual structure. But this is already a downtrend, so it's just continuing the downtrend.
Top of the move to the bottom. You drop a limit order at the 0.618, stop at the 1.0. Take profit just above the previous low. Trade fills. 7 minutes later, you're done. And if you want to keep going, you can. As long as that trade is alive, you repeat the process. Every new break of structure gets its own Fibonacci. Every retrace into the gold zone is a new opportunity.
Okay, let's try it out. We've got everything we need. So let's create a new project here. Euro against the dollar. There we go. And is trading notes. There we go. Select that. January 2026. Sit this down there. London. And perfect. Let's start this project. And let's see how this one works out. I've traded this before, I must say, in the 1 minute. So I do have some type of expectations. First, what we need to do is hop to the London Open, because that's when the euro against the dollar starts its movement. Obviously, we've got more movement in the New York session, but it's totally valid to do it in this. What I am going to do is I'm going to remove the spread on this pair here, because I don't trade with spread on the euro against the dollar. So I am going to remove this one. Move it to 1. There we go. Right. One ticker spread. I can take that. So what we need to look for, basically, break of structure. Everybody knows how structure moves. They don't. I've got a few videos on the channel that you can actually watch. But basically, a break of structure, like he said, and it's not actually a break of structure. So basically, we're going to be doing a continuation. Would be something like this. Okay. So basically, when we're gonna trace out Fibonacci, that is here. No, it isn't. Where is it? No, that's not what I wanted. There it is. So, Fibo retracement, there we go. 50%, just like I said before, chop down. So let's just change this to remove the levels that we are not going to use. Like this. Why didn't it remove? Okay, there we go. So as you can see, 50%. Price has made a new low. So with this new low, basically we have another Fibonacci retracement. Let's see, that one's come up. So that's why I don't like directly entering, because this is probably going to be a stop loss. And as well, for me it makes more sense of an actual break of structure. But in the video, it doesn't explain the actual break of structure. It's just a continuation of structure, what he's showing on the video. So we need to follow rules, and we're basically be placing limits at the 61 level, as he more or less said. Place it in the middle. Place it in the middle at the stop loss here above, and take profit to sell. Take profit down here at the low. Risking 1%. Just make sure everything's set correctly. There it is. So, this case was a stop loss. We did knew it was going to be a stop loss, so that's fine. And we do have, this is a market structure shift, okay? So let me just show you. But at the moment, we can see the price broke this level here, and this has created market structure shift. So that's what we've got to take care of, and we've got to keep an eye on. So this would be the interesting, because here is where we can actually look for these retracements. But obviously, how we explained it in the video as just continuations, then we're not going to just exclusively wait for this. So right at the moment, we can see that this level here, okay, that's where it's touched. So we'll be entering a trade here in the middle, place our stop loss just below, and take profit right above, and risking 1% per trade. Now let's see how this one performs. It's a quite simple strategy at the end of the day. You just need to understand the market structure. So there we go, nice take profit there, lifting the account up again. So that's always good. And let's see. Okay, it hasn't actually made a new higher high, so we're gonna wait. There we go. Now we've got a higher high, and this is going to be our levels. Let's bring this there. Okay, let's see if it goes any higher. It's gone higher up to here. See if it drops into our level. Okay, keeps going up. This is actually another market structure level here. So here is a bit tricky. So I would say probably this would come to here now, to be honest, because it did have its pullback and it's keep going up. But let's see if we get any pullbacks. Okay, it's coming near. That would be the entry. And another thing that I can tell you about this strategy is that trends don't tend to last too long on the 1 minute. Tend to break quite easy. And just now we've already had this break of structure where it broke the structure on this level here. And it had 1, 2, 3 pushes. 3 pushes is enough for the actual trend to come to the end. and obviously we hit the stop loss break in this market structure level. That is just here. You can see how it broke it there. So this will beat the actual entire push that we're looking at. So we'll be looking at something like that. So now we'll be looking to enter above this 50 level. And it's made another continuation. So basically we are going to shift our Fibonacci. Let's see where it gets to. So this is the last level. Push a bit lower. See if we get a pullback. Okay, there we go. That'll be our entry. So let's see if we get any good trades happening here. But honestly, this strategy isn't bad at all. I mean, I have a couple of friends that actually trade like this every single day, and they're doing fine. And I've traded it myself. The only thing that I don't like trading so much, you know, in terms of so many trades, and selecting one single trade in all the trades that you can get from this trading strategy is crazy. I mean, you can be looking at like 20 trades a day. So maybe automatic structure breakup can be used. Something like that. Honestly, Pablo, for this one in 1 minute, it can be a bit tricky in terms of doing automatic. In above 15 minutes, the market structure tends to be more clear, and doing it automatic is can be easy. But I don't know if, well, we can try it actually, but I don't know if it will mark out the market structure that actually I see. But we'll try it out in a minute. So set that there. Let's see if this trade comes back down again. Okay, there we go. Nice take profit there. Just now we are sitting on a $19 profit, so that's fine. And let's see if I remember we had an indicator like that. If I remember the name correctly, market structure shift. It's not marking out the ones that I actually see. At least this one. Can't remember if we had any more. No. No, well, we don't have an indicator to actually show these ones, exactly the ones that I want to look at. Unfortunately. What's that do? Okay, we're gonna update this. Continue trading down. Let's see if we get any pullbacks on this one. Okay, it's coming a bit lower. We do have a pullback here. And this is where it gets a bit tricky, again, because we need to say we either keep this one that hasn't been touched, it's got fair value gaps, or we take this one. Because this is a new valued structure. And this is where it can get tricky, and I don't like to trade it too much, to be honest. But in any case, we have a trade there, and I think it's going to hit stop loss. So let's add that there, take profit down here. Okay, risk 1%. And it's going to go to up here probably. Yeah, exactly. And we have a market structure shift there. The thing with this strategy is, and the people that I know that trade it, and they all come to the same conclusion, is to leave the market when you're in profit. It's basically the conclusion that they have all told me when they trade it. Because the best thing you can do is just leave when you've actually take profit. You don't need more than one take profit to have a good day at the end of the day. So obviously it's good to backtest loads of trades because you've got more information, more data, and more practice. But when we're actually trading it in terms of a real market, it's a lot more interesting just to take one winning trade when you won and just leave the market. Oh, okay. We have a double market structure break. As you can see here, broke this market level and then broke below again. This isn't normal. This doesn't happen always, but shit happens, as I say. So, but that's fine. That's fine. Let's check something here. What did I want to look at here? Okay. There we go. Perfect. So let's mark out our next level. It's going to be this one on the downtrend. So basically, we can do something like this. At the end of the day, we don't even need to turn the Fibonacci around because we know the levels. It's just above 50 in this case, so that's fine. Let's see how this one performs. If we get any retracement. Okay, we do. So we'll be entering the market, or probably, I mean, it's really close. So we'll be looking at something like that. Really small stop loss of 2.4 pips. This doesn't make me really happy, but it is what it is. Let's see if we get retracement on this one. Okay, hit stop loss. That's completely fine. We have another market structure break on this side here. And just now, we're still sitting at 10 o'clock in the morning. We've taken a couple of trades already, and we haven't even come to the London Open. Sorry, the New York Open. So let's mark out this there. Bring it up to here. See if we get any retracements. Just dab that there. Okay, we have another push here. So basically now we're going to adapt this there. And bring that there. And now, okay, pushes a bit higher. Pushes a little bit higher. And let's see if we get... Okay, now market structure is getting a bit choppy. And just now this is another market structure push. So I'm not going to take a trade on this one here because it doesn't make much sense. And it's going to hit take profit here. Oh my god. But it's fine. That's fine. That's why shit happens. Shit happens. I should have taken that trade, to be honest. But it is what it is. Okay, so we have this push and this push there. So we're looking at this one there. Did this one actually come to 61? It did actually. So we missed two trades here. Two take profits here actually. Because obviously this one I didn't take. But this one, when it came back down, I should have actually been looking at that one. But hey, that's fine. That's fine. Two take profits, so we'll be sitting more or less at break even if we would have taken them. So no big issue there. And are we going to be taking this one? No, we have another. Oh. Whoa, that's too small. Yeah, that is too small. That is too small. So to the buy. It's probably going to hit stop loss. I mean, there was a big candle coming down, so that's plus we had already a few pushes on this trend. We did miss a few take profits on here, but this can actually happen on real market. I mean, it's quite often this will happen in real market. That's why I haven't just gone back and taken the trade, because I just think it wouldn't be fair. But that's something that normally does happen. Okay, this is nearly a market structure level. I'm not going to take it as... I'm going to take it as a full structure. Okay, there would be our entry. Oh. Add this up there. Take profit down there. 1% risk. And let's see how this one performs. Oh no. No. Come on down. Come on down. Don't do that to me. Thank you. Thank you. Okay. Now we've got another push here. So we just bring this down there. There we go, our push. Let's see how this one performs. That's going to be stop loss. But we need to take a trade. It's a back test. We need data. And the more data we can get, the better. Because that way we can actually optimize, refine, and check things out. So that's the most important thing. At the end of the day, the backtest hasn't got to be good, especially the first one. Ooh, 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 ooh. Look at that. That was so close to the stop loss. So close. I mean, how that was 3 ticks. 3 ticks. That's crazy. That is crazy. Okay, we had made another low here, so basically we'll be in the same situation as before. Okay, it's gone a bit lower, and the market structure is going a bit close. to be honest. It's just about to actually hit the place here. And look, hey, that's actually a take profit there. Quite small, I must say. Quite small. But it looks like it's going to hit the take profit. Hey, not bad. Not bad. I mean, 1.7 pips of stop loss. That's crazy. I didn't open it. It didn't open it. Oh, this trade is gone. What a shame. Hey, in any case, it's opened another one up here. And let's add Fibo up here. See how this one takes off. Okay, that'll be our entry point, so that's fine. Let's add our buy position just there. Let's stop loss here. Take profit up there. And a 1% risk. There we go. Oh, let's see if we hit take profit on this one. It's looking better than the previous strategy, I must say. As well, it's a lot simpler. I've traded this before. I know more or less how it works. So it's not looking bad at all. And let me just check something here. We have taken quite a lot of trades this time compared to the other one. So it's looking good. It's looking good. We do have our profits sitting there quite nicely. Stop losses have been a bit bigger than I thought they would be. Don't understand why. Should be the same size as the take profits. Must have done something wrong there. Ah, commissions. Probably could be commissions. Sure. Didn't think about commissions there. But hey, let's bring this up there. See how this one works out. I'll be sitting there. So bring up to here, and we're just about to enter another trade on this one there. Maybe this could be a better idea on a different asset more than a euro against the dollar. Yeah, the euro against the dollar is great because it tends to have these healthy moves. But what we need to take in consideration is that the size of stop losses and take profits, the commissions take quite a big chunk out of our profit. So must think about that as well. Okay, hit a stop loss there, breaks the structure. We have a new structure level there, so I'll just take this one out. Bring this Fibo down to here and see if it retraces up. Okay, it's gone lower, creating a new market structure. Will be that one there. Okay. Goes lower. Oops, quite a lot of volume entering there. We're coming near to the New York session, so that's why. Let's see if we get any. Wow, it's been a quite big move there. Woohoo! Keeps going down. That's looking like a quite big trade. Ginormous trade. Let's see if we get the retracement. Okay. Ah, it's getting a bit tricky here. Getting a bit tricky. I mean, there's even a trade here. If we go close, there's even a trade here. This one, exactly. It's made a new market structure level, so it's a bit tricky. Obviously, it's a valid trade, so I'm going to take this one. I went too fast forward that time. But we do have a trade there. Again, 3.2 pips of stop loss. It's really small. That's the only bad side on this strategy, I would say. If we would be maybe in a 5-minute time frame or something like that. Oh my god, look at that. Look at that. That's why I close my trades always before I hit the take profit. I close them manually, and it's for this reason. I mean, I've seen this has happened to me so many times. I always close them before, like a couple of pips. When I see the price that it starts getting, I don't know if you know, when you watch the candles and the candle starts to get nervous in the other zone, I close the trade there. When I see that candle getting nervous, going up and down, up and down, up and down, I'm closing straight on. But this is the downside on this strategy, and we have taken so many trades today, and if you don't have a correct trading plan, you don't know when to stop, and that is a big no. Okay, what we have is another zone repeated itself here. We do have that. I'll just bring this there. Okay, there we go. Bring that there. See if it comes down to the level. Didn't get to the middle. We'll have to wait a bit more. Okay, that's the middle. I'll take that one. I'll buy that one. You sit in there. Place stop loss down here. Even on this trade, it's 4.6 pips of take stop loss and 5.4 pips of take profit. It's a bit meh, but it's still worth giving it a try. Okay. Perfect. Take profit. Nice one. So we'll just extend this up to here. And you can see the amount of trades that we get with this strategy is insane at the end of the day, because we're in 1 minute. And it's good in terms of, if we have a good trading plan, we can actually execute really well and do things in a sensible way. So we're not trading all the time. But if for somebody that needs some quick trades in the morning, don't have much time or whatever, it's probably the best way to scalp, because it's just really fast-paced trades. You don't have to wait too much for the setups to happen. Setups are really clear, and with experience, I know people that trade this every single day, and they're really fine with it. So just so you have that information, it's not a bad strategy at all, because you do get a lot of trades. So you can actually select what trades are good, what trades are bad, and with experience, it's just it just gets easier. And especially is to know when to actually stop trading, when to say, okay, I've had enough profit, and that's where the trading plan comes in. You've got to have that there, especially with these type of strategies. The strategy that I use personally only takes 1 trade a day, and I just take 1 trade. I don't need to think about how many trades I should be taking. But with this one, you do need to have this logic behind, otherwise you're going to be screwed. I mean, look, first thing is, when a trend is so overextended, just look at this. It's just been pushing and pushing and pushing. When we get to this point, the chances are of it breaking the trend are going to be a lot higher than actually continuing up. So that's something we need to be aware of, that we can't expect the trend to go on forever. I mean, it's going to break at some point. But let's add our buy here, because obviously this is a backtest and it's not live trading, so we're not going to lose any money. So we don't have to be worrying about anything of that, because when we've got this backtest, then we can actually say, okay, this is the amount of trades I should be taking, instead of just guessing. Because obviously the max trades that we should be taking have always got to be based on pure data. And what we do have here is another entry. Okay, there it is. Shame that this candle here didn't actually come up to the middle, because that would be quite interesting. But it didn't, so we are going to be entering in this green candle there. So somewhere like that. Stop loss again really short, 2.3 pips. I don't like so short stop losses, because the commission is just too high at the end of the day. And when we hit a couple of stop losses, it's just gonna burn our account. It's gonna burn like fire. So take this one away and add another one on the above, like that. There we go. Okay, bring this higher up. There we have another massive push. Okay, he's doing some tricky stuff, taking this market structure up to here now, based on this there. Let's see if we get pushed down now. Okay, that would be our level. And just now we're just actually entered the New York, and we have taken so many trades already. It's crazy. That's why we always say that in trading, more is less. Because if we just have our limits and say 4 trades a day, if I lose them, I've lost them. If I win them, I've made profit, or even less take profits. Just aim for a 1 or 2% a day. It's more than enough. We don't need to trade all these trades, because it's not. We're going to be sat in a rat bicycle, running around constantly behind the charts, trying to get another trade and another trade, because we've had maybe a losing streak, and that is just horrible. It's a horrible feeling. Okay, take this up there. Looks like we might get this pushed to this level. Okay, there we go. That was entered our trade there, so let's place our order. Sitting there, so stop loss 5 pips at least. It's a bit more, makes a bit more sense for me. See how this one turns out. Not looking bad at the moment. Okay, no take profit there. I can take that. And we just need to update our zone again. And as you can see, we just get so many trades. It's crazy. Okay, let's see if we get another one there. There we go. And it's just one after another, after another, after another. You can go mad. Because obviously this is, when you're backtesting it, you don't have any feelings behind. But when you're losing, winning and losing and winning money constantly, without any trading plan, without any control, that'll drive you mad. That'll drive you completely mad. So we have another trade there. And the only downside that I'm seeing here is that the commissions has taken quite a lot of our profit away, to be honest, because we haven't lost so many trades compared to our winning trades. And that'll be probably to the end of the day now, because the volume starts to drop. So another take profit there that we've taken, and we can see here in the journal, when we're taking the take profits, we're making like 90, 80, 70, and when we're taking stop loss 130, 130, 120, and always based on commissions. But look how many trades we've taken. I mean, it's crazy. The amount of trades we have taken in one single day. 21 trades in total. If you haven't got enough trades with this strategy, there's something wrong with you, I tell you. I mean, 20 trades in total. 20 trades. And like I say, it's not too bad. We can see we did have this bump up, and then we had a losing streak here and it came down. And this is when you need, most of the times, if you get a losing streak and then you get back to break even, sometimes it's best to just call it a day, because then look what happened. And now we're sitting on minus 3.5% in the day. So the exit optimizer hasn't got enough data to show me actually the best matching setting, which now it's sitting more or less at the same as I was looking at. So maybe a max holding duration could, no, needs more data. And try stopping for the day after the first loss to improve profits. 194 profits that we would improve here. Try focusing on high profited New York session. This is interesting. In a New York session, we are sitting on a 1.19 profit factor. Meanwhile, in the European session, we're sitting on a 0.49. It would be interesting as well, maybe changing to only use it on the New York session. It makes sense. This guy seems that he's from the US more than from London or Europe. So it seems like he's probably looking more at a New York session. So that'll be interesting as well. So maybe try it out. I'll probably do a video out of this strategy, you know, like giving it, improving it and all that. And consider cautiously increasing position size after winning streaks. It's only $37, so I don't think that would be too relevant right at the moment. It needs more trades, definitely, but it's not a bad start off, to be honest. I mean, I could backtest this like for maybe a month or something like that and get like 100 trades or something like that. And from there, get some solid data and maybe bring a video to you guys so you can actually see an optimization on this one, because this one is quite interesting. So at this point now, I think it's enough for today. We've tried 2 strategies that are not bad at all. Obviously, the results weren't the best because they need some optimization. But I think they're quite interesting, quite fun to trade. Happy trading. And hopefully next week we'll find some other strategies. And as well, don't forget that on next week, we probably are going to start with giveaways and all that on the channel. So stay tuned for that, because we're going to be giving away quite a lot of Forex Online accounts. So stay tuned. Subscribe to the channel, obviously. And thank you very much for everybody for joining. It's been a really good time for me. I've really enjoyed the backtesting today with you guys. Like I say, I love trying out new strategies and all that. And if I could do this with all you guys, and obviously it's a win-win, because you learn a bit of how I see the markets. At the end of the day, it's something that I can't share in one single video. It's something that we need to see on the lives and see how everything, see how I actually see the market, so I can maybe help you out. So said this. Thank you everybody for joining. Big hug to everyone, and I'll see you next time.